comes to poor pension funds and pension fund poor performance, there can be few worse than St. James's Place. Let's have a look at the data, shall we? So I've gone and taken one in particular, which is the St. James's Place Strategic Managed Pension Fund. Okay, 5-year return, 28%. You might think that's not too bad until you look at what that means annualized. It's only 5.1% annualized. So 100K became 128,000. Again, you might think that's not too bad. Let's just look at how much money it's actually costing you. You see, because the MSCI World Global Equity Index over the same period gave you 13% per annum. The FTSE All Share, 11.5% per annum. Okay, so what you end up with if you were to continue along that pathway is over 20 years, your St. James's Place one gets you to about 270,000. But the MSCI World is about $1 million better. Now, you might as well in 20 years, it won't continue going at these rates. You're absolutely right. The past doesn't guarantee the future. And maybe the last 5 years have been an aberration for St. James's Place and they'll catch up and the rest of the world will suddenly slow down. And with those slowing world headwinds, St. James's Place will nevertheless get to the front of the race. Highly unlikely, is it? So what are the various problems? Well, the fund failed to benefit from the global equity boom, which makes you somewhat worried. Because you think, who the hell's picking these companies? They even underperform the UK market. So what exactly are they tracking? They gave you volatility like 2020 and 2022, but they didn't give you the rewards that usually go with that kind of risk. And of course, their fees are notoriously high. That's a breakdown of their returns, 2020 all the way up to 2024. So the slow growth has limited their compounding power. This is why they're underperforming. That meant investors accumulated less wealth than the benchmarks, and the consequence of that is you get a wealth gap and, well, enjoy your retirement holidays in Brighton and not in Bali. So what's the answer? Well, what I might suggest as somebody who wants to lead the way in cleaning up the cesspool, which is the fund management industry for poor pensioners, is, first of all, educate yourself, learn about exchange-traded funds and index trackers, and if you want to invest yourself, because that's what SIPs and ISAs were created for, then have a look at my campaign for $1million.com, which will help you do exactly that. It was created to empower people. You can even get a free copy of my international best-selling book. I've written 18. This is just one of the bestsellers globally. And it's why we have clients around the world. I should put it over here so it's more in focus, shouldn't I? Okay. Have a look at alpeshpatel.com/links as well. Like and follow for more insights like this into your pension and investing. And feel free to reach out, same links, to get a free educational pension review. Thank you.